Humorist Will Rogers once lamented that times today have radically changed because today people are now taking their comedians seriously and their politicians as a total joke. On today's program, we've got an audience-requested matchup between two ETFs tracking opposite political parties. It's the DEMZ versus MAGA. This is going to be good. Find out who wins the battle right after this. This is ETF Battles. I'm Ron DeLegge. Good to see you again. A big thanks to everybody watching the show. Your likes, your comments, and your battle suggestions are overwhelming. Keep them coming. I'm humbled by your presence. Be sure to visit the description section below. Sign up for my weekly newsletter, plus lots of other goodies. We got this year's most popular online class has been Profit During Crashing Markets, a step-by-step guide. You'll learn how to use inverse ETFs for protecting and growing your portfolio when markets are on the decline. Now, today's battle was suggested by a viewer named Thomas Beck. It received some likes, which tells us that this matchup is what people wanted to see. It's between two ETFs with opposite political views. It's a Democratic Large Cap Core Index ETF, that's ticker symbol DEMZ, versus the Point Bridge GOP Stock Tracker ETF, ticker symbol MAGA. Now, keep in mind, both of these funds are not actively managed, but rather index linked. Judging today's contest, we've got Cinthia Murphy with ETF Think Tank and David Dierking with TheStreet.com. This is an illustrious duo. Welcome back. Great to see both of you.
Thanks, Ron.
Hey, happy to be back.
So cost, exposure, strategy, performance, and mystery are the four battle categories. Our judges are going to pick their favorite ETF in each category, and we'll tally up the results and declare an overall winner. Keep in mind, this program may also end in a split decision. Our judges can nominate wildcards if they feel there are better options elsewhere. And also, one more thing, none of the battle outcomes on this program are ever predetermined or known in advance by myself or any of our judges. So let's start with the first category, which is cost. David, please get us started.
Yeah, DEMZ is the clear winner here. It's got an expense ratio of 0.45%. MAGA is at 0.72%. So on expense ratio alone, there's a clear difference there. I usually like to just take a look at spreads to see if there's any big difference there. Both of these funds are under 20 million in assets, so they're thinly traded. Spreads are pretty high on both of them. So I think we can judge pretty much solely on expense ratio. DEMZ is the winner. That's
a strong start. Thank you, David. Cinthia, how do you see it in terms of cost?
I agree. That's an even stronger start.
Yes, it is.
No argument there. Yes, 100% agree. DEMZ for sure.
All right. Thank you very much, Cinthia. That takes us next to exposure strategy. This is where it gets interesting. Cinthia, give us your analysis.
This does get interesting because both of these funds are supposedly U.S. large cap funds, and they couldn't be more different from a sector perspective. You know, DEMZ is almost a third in tech names, but no energy. They actually set out to say absolutely no fossil fuels here. And then MAGA is like 17% energy. So that is a big difference in portfolio construction. Is there a better or worse here? No, it's really what sectors you want to bet in, what you believe in. So I'm going to give it to MAGA because I like just the diversification aspect of it. It has way more securities in there than DEMZ does, and it's equally weighted. So you're just diversifying a little bit your risk more across the spectrum. You're tilting a little bit smaller. So I'm going to give it to MAGA for diversification.
Thank you, Cinthia. I got you down for MAGA. David, you're up next. How do you see it in terms of exposure strategy?
Yeah, Cynthia's got it right. There's a huge difference between the composition of these funds. DEMZ has the big overweight to tech and communication. MAGA has the big overweights to energy and industrials and materials. So it's really just a matter of deciding whether you're looking for a growth fund or you're looking for more of a cyclically sensitive fund. The only thing I'd really add is that MAGA is equal weight, like Cinthia mentioned. DEMZ tries to optimize the portfolio to make it look a little more like the S&P 500 in terms of risk and return profile. So it's a little bit of a different portfolio construction process, but These are really two very different funds. So I'm just going to call it a split decision.
All right. Thank you very much, David. Split decision there. We next move to performance. David, give us your analysis.
Yeah, DEMZ launched at the end of 2020, so we've only got a little less than a year and a half to look at where these two funds have been able to perform side by side. Obviously, since the end of last year, cyclicals have done really well. Energy has done extraordinarily well. DEMZ doesn't have any energy sector exposure to it. MAGA, again, like Cinthia said, is up at like 16, 17%. So that's given MAGA the clear advantage. On a total return basis, I think MAGA has almost doubled the performance of DEMZ. So it seems like MAGA is the clear winner on performance.
Cinthia, you're up next on performance. How do you see it?
I agree. I would only add, the numbers speak for themselves. MAGA has worked best year to date, has worked best in a 12-month period, delivering almost twice the returns. I would only add that because of that tech component in DEMZ, the path of returns is definitely more dramatic. If you look at the two side by side on a chart over 12 months, MAGA is a little bit more of a range-bound experience versus the spikes and the drops that growth has caused in DEMZ. So if you like excitement, then DEMZ may be the better performer for you. If you like a little bit of a smoother ride, I think MAGA delivers there as well. So I give it to MAGA as well.
Thank you, Cinthia. Our next category is the mystery battle category, also known as the Alfred Hitchcock category. This is where our judges surprise us with that factor or maybe multiple factors that they feel are meaningful to today's showdown. So Cinthia, you're up. What is your mystery battle category and who wins it?
So I'm actually going to go with category fit. In this whole era of ESG investing and all the different flavors of principles investing, impact investing, all the terms we use, there's a lot of stuff out there that delivers and a lot of stuff that doesn't make sense. I mean, these two funds, there is no overlap between them. And you look at the methodologies are very different, and yet they both deliver exactly what they say they're going to deliver, which is this values-based, politics-based portfolio. They are very different from each other, and they deliver exactly the experience you would expect. And if you look at it on both of their websites, the messaging is clear, the material goes to the point. So I think they both deliver on the category of principles-based investing. There's no greenwashing here. It's really like a pure exposure to what they set out to do. So I actually give a split decision on my mystery category, which is, are they delivering what they say they're going to deliver? So category fit they're 100% spot on.
Well, that's a solid take. Thank you, Cinthia. David, how do you see it? What is your mystery battle category and who wins it?
Yeah, when I was taking a look at these two funds, I was on the DEMZ ETF page, and in big bold letters right at the top, it mentioned that the fund was fossil fuel free. So I wanted to take a little bit of a deeper dive into the ESG profile of these two funds just to see how different they were. Not surprisingly, DEMZ scores better on that. MAGA and its big allocation to energy puts it in kind of the below average category in terms of carbon exposure. DEMZ actually scores as a little higher than average in that. If you look at the ESG scores on the environmental side and on the social side, DEMZ comes out a little ahead. They both score pretty evenly on the governance side of things. So I think based on the composition of the fund, the result isn't too surprising. But on the ESG front, which is becoming a bigger consideration for investors and fund managers, I'd give DEMZ just the slight edge in that category.
Thank you, David. Now we shift to the part of the program where our judges can give us their overall battle winner. And this is a tight race. So we're going to see how it shakes down. David, who is your overall battle winner?
Yeah, this is an interesting one because they both had the same objective, one going to one side politically, one obviously going to the other. The portfolios are really different, but I mean, let's face it, if you're considering investing in DEMZ or MAGA, you probably don't care about expense ratios. You're probably not taking a deep dive into index methodologies or anything like that. You just want to invest with what's aligned to your political beliefs. So I guess in that sense, maybe they're both winners. I don't know. It's tough to say. Like Cinthia said, they both deliver on what they set out to do, and that's to offer exposure to very specific set of political beliefs. So it's probably a split decision. If you're forcing me to pick one way or the other, I'd go basically on how I judge the other category. So I'd give the slight advantage to DEMZ, but I think both are pretty much doing what they set out to do.
All right. Very good. Thank you, David. Cinthia, your final chance to weigh in with your overall winner.
Yeah, I think we're all a little bit afraid of, the ramifications of taking a side here. This is not about politics. It's about the ETF structure. So just to clarify. But, this is fascinating because to me, this is an us versus them battle where the opponents are absolutely equally matched. They both do a phenomenal job of capturing that. They're both U.S. large cap funds. From performance, one wins. From price, the other one wins. So I actually think a split decision is not copping out of the politics involved. Is that these two funds are really doing what they're supposed to do, and they both do it well. So I'm with David on this one. It's a split decision. That there's no winner here.
Well, our judges have weighed in, and according to my battle scorecard, this is a split decision between DEMZ and MAGA. And our judges raised some really solid points. I think the biggest point is, well, what is your goal? What is your own ideology? That's going to determine at the end of the day which of these two ETFs that you decide to choose. And are we even investing this way anymore based on what our political leanings are? Well, if that's the way you want to invest in a sleeve within your portfolio, these are definitely two ETFs to take a look at. Certainly, they offer exposure to a certain theme or certain way of investing that would clearly align with that political view, whatever that is. And again, our judges raised some awesome points. And of course, some things that really jumped out to me is the energy exposure, which is becoming a big deal because energy prices have soared here in 2022. And certainly that has explained to a large degree why MAGA has outperformed. Plus, MAGNA's got a little bit more securities in the portfolio. It's got more diversification, as our judges pointed out. But DEMZ has more volatility, and it's a little bit more of a higher conviction portfolio. So, again, great job to our judges for breaking out those differences. And what did you think about today's outcome? Do you agree with our judges? Let us know. Hit the comment section below. Also, don't forget to like our content if you've been enjoying our videos. Let us know which ETF battle you'd like to see. Send us your ticker symbols in the comment section below or on our Twitter feed at ETFguide. That does it for today's program. A huge thanks to Cinthia and David for breaking it down for us. We'll see you again next time.
Thanks, Ron. Always a pleasure.
Good to talk to you, Ron.
I'm Ron DeLegge, and until next time, watch the battle before you invest right here on ETF Guide TV. Take care.